I think, first of all, what you're going to see from financial institutions, particularly banks, is you're going to see them comment on two things besides the obvious interest rate direction, as well as the economy. One is net interest margin. As interest rates drop, as you well know, net interest margin gets chewed up. And when that happens, that tends to impact share prices. I think also what you're going to see, and this is going to be surprising to many viewers, is you're going to see less and less commentary about loan defaults relative to commercial real estate. And in fact, some companies, I think, have actually over-reserved, and you will see it additive to earnings because they've over-reserved for potential delinquencies as private equity now is stepping into the marketplace to soak up some of these excess properties, such as big hotels in big cities. So, as always, they're going to be cautious in their outlook, but I think they're going to very much focus on reduction in net interest margin. I think that's going to be really the key issue for these companies in terms of earnings momentum going forward.
Michael, lower defaults, is that simply going to be a function of rates coming down, or is this more because the narrative seems to be shifting more towards growth now for the economy, which would help values?
Yeah, no, the reason why, what's happening in U.S. commercial real estate is companies that invested in real estate put 10% down. They're basically walking away from their 10%, turning the loans over to the banks or to private equity, whoever the highest bidder is. So I don't think it's really a function so much of what's happening with interest rates. I just think there is a ready market of people out there ready to buy stuff. In some cases, pennies on the dollars. In San Francisco, for example, there are hotels that are selling for 20% of what they sold for 5 years ago. You got PE all day long waiting in to buy those sort of properties to either make them, have them continue to be commercial properties or turn them into residential properties. One of the biggest shopping centers in San Francisco, which was a hallmark of shopping in San Francisco, is likely going to be turned into a residential area and probably very, very high demand. So I just think it's a shifting of the purpose of these properties, and that's why I think banks are not going to get hurt as much as people think, because these are not nuclear waste sort of properties. They just need to be repurposed.